Dividend investing is a highly successful strategy that offers investors a steady stream of income and the potential for capital appreciation. With a track record of outperforming the S&P 500 while maintaining lower volatility, dividend stocks have become particularly attractive to risk-averse investors, especially those approaching retirement. If you're new to investing, you might be wondering about the advantages of dividend stocks and how to make the most of them. Imagine you decide to invest in a company and purchase 100 shares at a price of $10 each. Here's where the excitement begins. Each of those shares reward you with an annual dividend of 50 cents. If you invest $1,000, you'll receive a total of $50 in dividend payments over the course of the year. That translates to a noteworthy 5% dividend yield, which is no small feat. Once you've received your dividends, you have several options for utilizing those extra funds. Option 1 is to enroll in the Dividend Reinvestment Plan, or DRIP. This plan allows you to automatically reinvest your dividends, acquiring more shares of the same company. By leveraging the snowball effect of compounding interest, you can potentially enjoy capital gains while also benefiting from tax advantages. Option 2 involves exploring new investment opportunities. You can use your dividends to purchase stocks in different companies or explore diverse financial products, thereby adding a touch of diversity to your investment portfolio. Option 3 is to save the cash. You can securely set aside those crisp dollar bills for a rainy day or save them toward fulfilling your long-awaited dream vacation. Just keep in mind that capital gains may be subject to taxation. Dividend stocks present an incredible opportunity to receive predictable payments on a quarterly, semi-annual, or annual basis. While not every company can maintain a consistent dividend payout across all economic conditions, there's no need to worry. With a well-diversified portfolio of dividend stocks, you can enjoy a steady stream of income, providing you with a gentle shower of financial stability. One remarkable aspect of investing in dividend stocks is the potential for capital appreciation. As the companies you invest in thrive and expand, their stock prices have the potential to reach new heights. If you possess strong investment acumen and can identify companies with a competitive edge in the market, you may consider taking on additional risk for potentially higher returns while still receiving regular dividend payments. When your investment proves successful, you not only earn dividends, but also witness your total returns surpassing the performance of the broader market. Let's take a look at 3 examples of dividend stocks. Chevron, NYSE, CVX, an energy company, offers a dividend yield of 3.88% with a quarterly dividend amount of $1.51. Procter & Gamble, NYSE, PG, in the consumer defensive sector, has a dividend yield of 2.47% and pays a quarterly dividend of 94 cents. Lowe's, NYSE, LOW, a consumer clinical company, provides a dividend yield of 2.01% and pays a quarterly dividend of $1.05. These companies exemplify the potential of dividend stocks to offer regular income to investors. Procter & Gamble and Lowe's are part of an elite group known as the Dividend Kings. Having increased their stock dividends for over 50 consecutive years, they are also the distinction of being dividend aristocrats, alongside S&P 500 index companies with more than 25 years of consecutive dividend growth. Chevron is another aristocrat, maintaining a streak of over 35 years of dividend growth. Dividend stocks can be found in various industries, each with varying dividend amounts and yields. To find good dividends, there are several metrics you should consider. 1. Dividend yield. This golden percentage reveals the annualized dividend in relation to the stock price. It helps you gauge the attractiveness of a stock and allows for a comparison with historical levels. While a higher yield is desirable, it's essential to prioritize a company's ability to maintain and potentially increase the dividend payout. Beware of unusually high yields that may raise red flags. 2. Dividend payout ratio. This powerful metric showcases the dividend as a percentage of a company's earnings. A lower payout ratio indicates a dividend that is more sustainable and leaves room for future growth. 3. Cash dividend payout ratio. Sometimes earnings can be deceptive due to non-cash factors. Cash dividend payout ratio represents the dividend as a percentage of a company's operating cash flows minus capital expenditures. By considering the actual cash situation, you gain a better understanding of the dividend's true sustainability. 4. Total return. This metric captures the overall return on your investment, including both capital gains and dividend income. It's the ultimate reward for dividend enthusiasts. 5. Earnings per share, EPS. EPS normalizes a company's earnings to the per share value, showcasing its ability to consistently increase earnings over time. A history of earnings growth often hints at a sustainable dividends and an enduring competitive edge. 6. P/E ratio. The price to earnings ratio measures a company's stock price relative to its earnings per share. By analyzing the P/E ratio alongside the dividend yield, you can determine whether a dividend stock is fairly valued. Inexperienced dividend investors often make the mistake of prioritizing high-yield stocks without considering potential risks. High yield can sometimes indicate a declining stock price and the possibility of a dividend cut, which is known as a dividend yield trap. To avoid falling into this trap, follow these steps. Don't solely rely on dividend yield. Assess payout ratios. Analyze dividend history. Study the balance sheet. Evaluate the company and industry. Be cautious of unrealistic yields and focus on dividend growth. Dividends are taxed at rates ranging from 0% to 20% for qualified dividends. Depending on your tax bracket, this is generally lower than ordinary income tax rates. However, some dividends, known as non-qualified or ordinary dividends, are taxed at your marginal tax rate. Certain stocks like real estate investment trusts, REITs, and master limited partnerships, MLPs, may have higher tax obligations due to their corporate structures. Holding dividend stocks in a tax-advantaged retirement plan, such as an individual retirement account, IRA, can exempt you from this extra tax burden, but investing in MLPs may still incur taxes, even with an IRA. Dividend stocks present a compelling investment approach, showcasing a history of outperforming the market with greater stability. These stocks not only regular income streams through dividend payments, but also hold the potential for capital appreciation. As you delve into the world of dividend investing, it's crucial to consider essential metrics such as dividend yield, payout ratios, dividend history, and the financial health of a company. While high dividend yields may seem enticing, they can also indicate underlying risks that require careful evaluation. Taxation is an integral aspect to bear in mind. Qualified dividends are taxed at rates lower than ordinary income tax rates, ranging from 0% to 20%. However, certain stocks like real estate investment trusts, REITs, and master limited partnerships, MLPs, carry higher tax obligations. Strategically holding dividend stocks within a tax-advantaged retirement plan can help mitigate tax burdens and maximize your returns. Diversifying your dividend investment strategies can further enhance your portfolio's stability and growth potential. Explore options such as constructing a dividend-focused portfolio, reinvesting dividends, or allocating funds into dividend-focused funds. By incorporating dividend stocks into your investment mix, you're not only reducing volatility, but also accelerate your progress towards achieving your financial goals. Remember, the world of investing is dynamic and ever-evolving. Stay informed, continue learning, and adapt your strategies to the changing market conditions. With diligence and the right approach, dividend stocks can serve as a valuable asset in your journey towards financial success.